economy, right? Everyone's talking about it, headlines everywhere, opinions flying. But what actually matters for you?
Yeah, that's the key question, isn't it?
That's what we're diving into today. You sent us this video. Bad news. Tesla stock, TSLA. Elon Musk's $100 billion pay package canceled, plus Fed warning.
Oh, yeah. Meet Kevin. He always brings the energy, doesn't he?
He really does. And this one, wow. Won $100 billion pay package, gone. Judge might force a sale. And wait, is Meet Kevin learning to fly a plane now?
That's what I love about his videos, like corporate governance, market swings, even personal goals.
Yeah.
All smashed together. But let's break it down. What's important here for you listening?
Okay, so first up, this whole Elon Musk pay package saga. Meet Kevin lays it out. The original plan. Back when it seemed like only $2.6 billion.
Which was already insane, right?
Right.
But it was all tied to Tesla hitting these crazy performance goals. And, well, they did.
And now?
Now, that package is theoretically worth over $100 billion. Except, boom, shareholder lawsuit. They argue it's unfair, and a judge just canceled the whole thing.
Wait, hold on. Didn't shareholders already approve it? How could a judge just, overrule them?
This is where it gets interesting. Delaware contract law. It's kind of like the rule book for how companies operate. And this particular judge, she's known for being super strict about it.
I'm sensing a butt coming.
But yeah, she's the same judge who forced Elon to buy Twitter, remember? Her point is, shareholders might not have known everything, especially with Elon's brother being on the board that approved the plan.
So even though they voted, the judge is saying they didn't have all the facts.
Exactly. So it's less about the amount, more about how the deal went down, raises some big questions about transparency, how companies are run.
Okay, so I would think canceling a massive expense like that, that's good for Tesla stock, right?
Yep.
Less dilution, more value for the shareholders.
You'd think. But here's the thing. Markets hate uncertainty. So now investors are like, wait, what's the new plan? Will there be even more stock dilution later? That unknown can actually scare people off, at least for now, even if it means a healthier company long term.
And Meet Kevin actually thinks Elon will win this on appeal eventually, which makes this short-term thing even weirder.
Right. It's a good reminder that investing isn't just about the company itself. It's about psychology, how other people are reacting. So for you listening, the question is, can you handle those ups and downs, or do you need something more predictable? Knowing this stuff helps you pick the right strategy.
Okay, so that's one big risk with Tesla. But Meet Kevin doesn't stop there. He's also talking about the competition. Other car companies are catching up, tech-wise, which could mean Tesla can't charge as much anymore.
He's still super bullish on their innovations, though. Cybertruck, full self-driving. But even those might be delayed. And then there's that Bloomberg intelligence report you mentioned saying the entire car industry could be in for a rough time. Prices might have to drop a lot.
Yeah. Prices have been inflated for a while. And Meet Kevin pointed out that used car prices are already dropping like crazy, even used Teslas. He even gives us some numbers, specific prices where HE would buy more Tesla stock, like $318, even $265. Clearly, he sees an opportunity, but he also suggests start small, add more as the price drops.
Smart. The classic dollar cost averaging. Smooths out the bumps. Can be good if you're okay with some risk. The point is, even when things are kind of scary, there are ways to handle it.
Okay, so we've got Elon's pay, the competition getting closer, maybe a whole industry downturn.
Yeah.
It's a lot. And then we bring in the Federal Reserve, and it gets even wilder.
Right. It's like, on one hand, boom, economy's doing great, at least according to the Atlanta Fed's GDP nowcast. But Meet Kevin's like, hold on, I don't see the hiring for this. It feels overheated. And he's speaking from experience, as a business owner himself.
And then dot bam, 3 different Fed officials, all hinting at rate cuts, like all in the same day.
Which is huge, right? Cutting rates can boost things, but it also means the Fed might be worried. Like, they're admitting maybe things aren't as good as the reports say.
Which brings us to Meet Kevin's bond prediction. He's saying bonds will be the best investment next year because of these rate cuts. And he's already buying them.
Yep. Interesting contrast to the Tesla strategy, huh? Diversifying, playing both sides. It's all about understanding how the whole economy works and how different investments do well in different situations.
Okay, so Elon's pay, Tesla's risks, the Fed may be cutting rates. I'm starting to see how it all fits together, but I have to say, my head is spinning a little.
I don't blame you. It's a lot to take in. But that's what these deep dives are for. Connecting the dots, seeing the bigger picture. Take a breath, let it sink in, and we'll keep going in the next part.
It is a lot, right? But that's just how things are these days. Everything's connected.
It really is. Like a CEO's pay, what happens to a car company, even just like rumors from the Fed. It's all part of the same puzzle. Exactly. And you, listening right now, you're right in the middle of it all. So let's zoom out for a sec. What does this actually mean for you, for your money, for the choices you make?
Okay, so let's say I'm listening to this, thinking about my own investments. After all this, am I bullish on Tesla? Bearish? Do I, buy a ton of stock, like Meet Kevin might say, or should I be running away?
That's where it gets personal, right? What are you comfortable with, risk-wise? What are your goals? There's no right answer for everyone. Meet Kevin, he sees opportunity, even with the risks. But he's also very open about the fact that he takes big risks. He even mentions his Trumponomics course, where he really goes deep on this stuff.
Yeah, he actually uses Tesla as an example in that course.
Yeah.
Shows how he analyzes companies, how he handles these crazy market swings. He even breaks down Supermicro Computer, which, by the way, has doubled in price recently.
See, that's another key thing, diversification. Meet Kevin loves Tesla, but he's also putting money into bonds, which usually do well when interest rates go down. It's about not putting all your eggs in one basket.
Speaking of bonds, you said they do well when rates drop. Can you explain that a little more? Why does that happen?
Sure. Bonds are basically loans you're giving to the government or companies. When interest rates fall, the older bonds, the ones you already have, they become more valuable because they're paying a higher rate than any new bonds that come out. It's a bit weird, but that's how it works.
So if the Fed does cut rates, like Meet Kevin thinks they will, bonds could be a good place to be.
Potentially, yeah. But again, it depends on your situation. Are you saving for retirement, a down payment? Investing is a long game, not a quick win. It's about making choices that make sense for you long term.
And Meet Kevin's own life. It kind of adds another layer to all this. Building businesses, learning to fly, trying to keep up with 7 kids. It's pretty wild to see him doing all that, and still diving deep into this financial stuff.
Right. Makes it feel more real, I think. He's not just some guy in a suit talking numbers. He's a real person with real experiences, and he actually wants to share what he's learned to help other people.
That's what makes these deep dives so good, I think. We're taking this world of finance, which can be really complicated, and making it, I don't know, relevant, understandable, maybe even a little fun.
Exactly. Because in the end, it's not just charts and graphs. It's about people making decisions, trying to figure things out. And sometimes a little knowledge and maybe a good laugh can really help.
Well said. Before we wrap up this part, though, there was one thing Meet Kevin said that stuck with me. How the Fed might be getting nervous because they're not seeing as many people getting hired as you'd expect with a strong economy.
Yeah, that's a really sharp observation. It's like maybe those official reports, they don't tell the whole story. We always hear about GDP, unemployment numbers, but what's really happening out there can be different.
He's out there talking to people, seeing what businesses are doing, getting a feel for the real economy, not just the numbers. And what he's seeing isn't always as rosy as the reports might suggest.
It really shows you can't just trust the headlines or the data blindly. You got to look around, talk to people, form your own opinions.
It's like he's saying, don't just trust the data, trust your gut. Look around, talk to people, and form your own conclusions.
Right. And that's a powerful idea. It means we can all be a part of this, not just watching from the sidelines. Ask questions, don't be afraid to disagree, and try to see things from different angles.
If there's one thing I want people to take away from this deep dive, it's that. Don't be afraid to ask questions, do your research, and make decisions that feel right based on what you learn. And hey, maybe even take a page from Meet Kevin's book and try something new and exciting, like learning to fly a plane.
Now that would be an adventure. Speaking of learning, remember how Meet Kevin was talking about how Tesla might not have much competition, especially with the Cybertruck and full self-driving coming? He's really excited about their potential.
He is, you can really feel it. But he's also not pretending it's all smooth sailing. He said Tesla's valuation is pretty high right now, which means they could be hit hard if the market takes a downturn.
That's why he suggests that slow and steady approach, right? Start small. And if the price drops to those numbers he mentioned, like $318, even $265, then you buy more.
Right. Those are his targets based on what he knows and how much risk he's okay with. And he even threw in that interesting bit about the used Tesla market. He was saying you can find some amazing deals on used Teslas with autopilot right now.
It just shows you knowing what's going on in the market can help you make smart moves. If you're interested in Tesla but not sure about the price, maybe the used market is worth checking out.
He even compared the price of autopilot on a new Tesla, which is like $8,000, to the price on a used one, which could be as low as $1,000. Huge difference.
It really highlights how fast technology can lose value and how being a smart shopper can save you a ton of money. So, new or used, the key is to be informed, do your research, and make the choice that works for you.
All great points. And it all comes back to our main theme. Knowledge is power. The more you understand about the economy, the markets, everything that's going on, the better you'll be at making smart choices for your financial future.
Absolutely. It's about seeing the bigger picture and realizing that even things that seem unrelated can have a huge impact on your money, your life, everything.
Which brings us back to that judge's decision about Elon Musk's pay package. It might seem like some far-off corporate drama, but it actually brings up some really important questions about how companies are run and what the people in charge are responsible for.
You're right. It wasn't just about a big paycheck. It was about potential conflicts of interest, about being transparent, about accountability. It's a reminder that even the most successful companies can have ethical problems, and that we, as investors and just as people, need to hold those in power accountable.
It makes you think, doesn't it?
Yeah.
Like, how much power do CEOs and boards have, and how do we make sure they're doing what's best for everyone, not just themselves?
Those are big questions, and they're worth talking about. This whole case, it's just one example of how complex things are and the challenges we face trying to navigate this crazy economic world.
Well, we've covered a lot in this deep dive. Elon Musk's pay, the Federal Reserve maybe changing course, meet Kevin's thoughts on Tesla, and the bond market. It's been a wild ride.
It has, but it's been great unpacking it all with you.
It really has been a lot to process, but that's what I think makes these deep dives so valuable. We're giving you, the listener, the tools you need to go beyond just the headlines and really understand these issues.
Absolutely. It's not just about knowing the facts. It's about connecting them, understanding the implications, what it all could mean down the road.
Like, we're giving you a peek behind the curtain of the economy, showing you how it all works together, and knowing that, well, that's powerful stuff.
You got it. When you know the why, not just the what, you can make better decisions about your money, your career, even just getting by day to day in this crazy world.
So as we wrap up this deep dive, what's the one big thing you hope our listeners take away from all this?
I'd say it's this. Don't just sit back and watch. Get involved. Ask questions. Don't believe everything you hear and try to see things from different sides. The more you understand, the more control you have over your own financial future.
I love that. And with that, I want to thank you for joining us on this wild ride. We've covered a lot of ground today, but hopefully we've also sparked something in you. The desire to keep learning, to keep exploring, to keep diving deep.
It's been a pleasure diving in with you.
And until next time, happy diving, everyone.